If you're going to DCA into a Bitcoin position, why not generate more sats doing it and look at mining? Price and hash rate is the twin helix of Bitcoin's DNA. So you've got like one strand that's going this way and another strand that's in parallel. They're interrelated, but they're not exact one-to-one. Hash rate has sort of broken its 4-year cycle. That's a precursor for Bitcoin's price cycle to break as well. There's going to be a phase shift to where humanity shifts across the event horizon and into Bitcoin as the primary store of value. Mining is the only thing you can do on the entire planet that you invest dollars to get into and you get Bitcoin as a return. When miners make their biggest returns is when the hash rate cannot keep up with the price appreciation. Ever since China banned Bitcoin, the chart has just been up and to the right.
Why should someone mine Bitcoin in the first place? There are a lot of different ways to mine Bitcoin, but like, why even go ahead and mine Bitcoin?
Well, I think it depends on your frame of reference. So there are two reasons that clients of ours choose to mine Bitcoin. One is to stack sats, and which is, the way that Satoshi designed Bitcoin to be distributed on the Bitcoin network. The other reason is to stack fiat. And when you look at those two choices, like if you're going to stack fiat or if you're going to stack Bitcoin, you wind up with different analysis. And that's been a point of confusion, I think, in our industry. So for instance, if you're mining Bitcoin to stack sats, and there's good reasons to do so, and I'll mention what a few of those are, but if you're mining Bitcoin to stack sats, it's not an ROI question. And the reason why it's not an ROI question is because you want to know, what did those sats cost you to acquire as compared to what would it cost to acquire those same sats on an exchange? Because that's the other way that you can acquire your sats, right? Now, the confusing part about that, though, is it's counterintuitive, because mining is the only thing you can do on the entire planet that you invest dollars to get into and you get Bitcoin as a return. So it's very natural for people to want to analyze Bitcoin mining from an ROI perspective, because that's how you analyze every other investment on the planet that you make. But mining is a 0-to-1 invention. And you have to look at it as a Bitcoiner from an alternative perspective. Now, there's a lot of people that choose not to look at it from a Bitcoiner perspective, from a fiat perspective, look at it from passive income. And for our particular business, that's not the client type that we're trying to serve. We're happy to, but that's not where we're tailoring our target audience, because we find that Bitcoiners that are mining with us just tend to be better customers and understand things. Most of the passive income folks that are mining with us, they wind up getting confused about, hey, why are my payouts going down? Why am I not getting them as frequently? And it's because the network difficulties increased. What do you mean the network difficulties increased? I thought you said it was going to be X dollars per month. And I was like, no, if you read all the disclaimers, we're not promising any specific revenue. This is not rental income that you've got. What we're promising is the opportunity to mine Bitcoin with your hardware. And as difficulty goes up, your rewards will go down. What counteracts that is the dollar value of those rewards is increasing over time, right? So they become more valuable. But, over time, we're drifting lower and lower in terms of how many sats per terahash your mining rig's going to generate. So as a Bitcoiner, to talk about that perspective, the primary reason why people are mining to stack sats is because it's cheaper than going to an exchange. Maybe not cheaper in a specific moment in time, but generally it is cheaper. So you're able to get more sats for your dollar. That's the primary reason. The secondary reason is the sats that you generate while mining are wild, meaning that they are from the block reward directly. And that means that there's no identifying information associated with those. And what's really interesting is we've noticed a unique phenomena with our clients, which is a willingness to use the Bitcoin that they've mined rather than just sit on it. And my sense is that's because when you purchase your Bitcoin on an exchange, you have a sense that there's a surveillance camera sitting on your sats, and you got some like mental friction. I was like, hey, maybe I won't just send these off to my buddy on the other side of the planet that needs a few bucks right now. maybe I'll figure out how to wire him some money just in case I get tracked. I don't know how to report it. I don't know how to deal with it. And I'm not saying don't do any of those things, but when those strings are cut off the sats that you generated, then people just feel at liberty to use them.
It's interesting. When I put the tweet out, what people think about Bitcoin mining as a service, because I think in El Salvador, it's the first time ever that I thought about Bitcoin mining as a service when I saw you on stage. And then I was researching a little bit. I was like, oh, that sounds interesting. Let's see what Twitter thinks about it. A lot of people were commenting, oh, it's just like way more efficient to buy Bitcoin than just to mine it. And is this like, is there something to it? Is like, when is it better to just buy Bitcoin, or is there some like those types of persons should just buy Bitcoin on exchange? Those should maybe look into the mining Bitcoin. You probably have done a lot of calculations around that topic already.
Yeah, I mean, there's some really just simple heuristics that you can use, but I think that the most important one is it's just back to it being a 0 to 1 invention. And a lot of people, the same way that Bitcoiners first started to look at Bitcoin, and when you start that process, right, you kind of have to break some of your priors. You know, you kind of have some ideas about what Bitcoin is, what money is specifically, and you go through a process that Bitcoin sort of humbles each of us, and we realize like, oh my God, I was totally wrong about what money was, and now that I understand what money is, now I need to put my life savings into Bitcoin and do everything in my power to stack it, right? And there's a similar process that goes on with mining, where I think that people look at it and make some false comparisons, and then believing that they're accurate comparisons wind up making bad decisions. So one of those is that I often hear is saying, hey, look, I can get more sats. Like, let's just use some simple numbers with this. It costs about $5,000 for a mining rig to get deployed on our website, right? Just simple numbers. Now, you can say, hey, if I take that same $5,000, I go to an exchange and buy Bitcoin, I'm going to wind up with more Bitcoin. That may very well be true. And that sounds like an equivalent comparison, but it's actually not, because you're looking at your dollars being used for the exact same thing. And when you buy a piece of mining hardware, that's not the same thing. What you're actually purchasing is a piece of hardware that has 3 years, on the low side, 3 years of useful life. What does that mean? That means over the course of the next 3 years, you're going to pay for electricity, but you're going to spread out the cost of that hardware to generate Bitcoin. What does that sound a lot more like? That sounds a lot more like a DCA product. So the equivalent actually with $5,000 is to go set it on an exchange and dollar cost average every day for the next 3 years. How many sats do you get there versus how many sats do you get by, having your mining rig going for the next 3 years? Now that's an equivalent argument. But the reason why people often compare those two things that are apples and oranges is because it is simpler to simply put your Bitcoin on an exchange and plunge. But for a lot of people, that's a lot more risk, especially newcomers to Bitcoin. $5,000 all at once, if that's what they were going to put into a purchase, can feel like quite an emotional roller coaster. And so people have different risk profiles. And so a lot of people feel more comfortable DCAing. And that's really our argument is, hey, if you're going to DCA into a Bitcoin position, why not generate more sats doing it and look at mining? So generally speaking, you wind up with more sats as long as you're not in the mania phase of the bull market. And the reason why is because the hardware prices tend to jack up quite a bit during the mania phase of the bull market. So that tends to not be the best time to start mining.
So a bear market is a better time to invest in mining than a bull market?
Typically speaking, yep. But here's the thing: once you are, there's another sort of false equivalency that's made often about mining, which is that you're dealing with keyboard strokes, and that's how you start mining, and it's not. Proof of work is where reality meets Bitcoin. And what I mean by that is, if you say, I want to buy a mining rig today, for the most part, unless people are mining on equipment right now that they're going to resell to you, secondhand equipment, then you are going to have to wait some period of time for that manufactured product to wind up in a data center to be deployed to start hashing to your wallet. And that time span is often overlooked. And the effort necessary to construct and build a data center is often overlooked because we're really used to, in the world of digital, to things happening instantly. And it just sort of breaks our minds that we actually have to deal with the physical reality of Bitcoin mining. And so that can confuse a lot of people. So basically, in the mania phase of a bull market, when energy is quite hard to come by and hardware is going up in price, it takes much longer for your equipment to get deployed. So you buy a mining rig at the peak of the bull market. It's the most expensive. It takes a long time to get plugged in. You're probably going to get plugged in during the bear market at that point. And then you're generating sats that are extremely expensive because the price of the hardware was quite expensive when you made your purchase.
Interesting. And also the thing where from the time you buy and from the time you first start earning the Satoshis, price could rise up 40% if you have a wrong month.
Exactly. And that's why getting started in the bear market is so important, is because when miners make their biggest returns is when the hash rate cannot keep up with the price appreciation. So in essence, I think of actually price and hash rate as kind of the twin helix of Bitcoin's DNA, right? So you've got like one strand that's going this way and another strand that's in parallel, right? Like the DNA dual helix, and they're interrelated, but they're not exact one-to-ones, you know? So as Bitcoin's price appreciates, in order for the profit to stay the same for mining, hash rate has to come online at an equivalent rate. And that doesn't happen because reality just cannot keep pace with the price appreciation during a bull market. And so by being plugged in, you in essence get to take advantage of that gap that forms, and your margins get quite wide. So, you know, there were tales of people that plugged in at the perfect time during the last cycle, and they saw their hardware paid for itself in 2 to 3 months in terms of just a dollar value. That also means, though, that from a price of your sats standpoint, that you're getting a massive discount as compared to buying Bitcoin on exchanges at that point. And we've seen, you know, for instance, last I looked at the current cost to mine a Bitcoin, which we use Galaxy Digital's model that they've published, and it's kind of an open sourced approach to calculating how much does it cost. You know, it's about $47,000 to dollar cost average right now into a Bitcoin position using mining hardware versus going to an exchange where it's what, 96,000 today. So, you know, that will change as more hardware gets plugged in, but that's the current status.
It's interesting the comparison between price and hash rate. I've seen in the last bear market where the price went down, but the hash rate actually kept going up and hit a new all-time high, even when the price was like down 40-50% of the all-time high that was previous there. Is the hash rate always following the price, or like what is the kind of the comparison you throw there of hash rate and the Bitcoin price?
Man, you're asking the $1 trillion question that nobody has an exact answer to, right? So here's one thing that I find shocking that more Bitcoiners don't talk about, which is that up until this last cycle, the hash rate has had its own cycle, and it has been somewhat correlated to the price action of Bitcoin. Now, ever since China banned Bitcoin, the chart has just been up and to the right. I mean, it's with very few pullbacks. I mean, there's been some pullbacks, but for the most part, if you zoom out on a hash rate chart, I mean, it's phenomenal. And so it seems that hash rate has sort of broken its 4-year cycle from my vantage point. And I think personally, we need data to prove it out, but I think that that's a precursor for Bitcoin's price cycle to break as well. Now, whether that happens this cycle, next cycle, I don't know, but you can certainly see with all the sovereign nation state adoption, you know, Michael Saylor's strategy that we're getting close. Nobody's wanted to really say that. Even prominent Bitcoiners are hesitant to say, like, hey, maybe this is the phase shift cycle. Maybe this is the super cycle. I don't even want to say that either. But you look at it and you're like, at a certain point, it's like, it's going to happen, right? And is hash rate breaking its cycle a precursor? Possibly. Um, you know,
Interesting. I never thought about Hashrate that they have their own cycles and they broke that. And it's a really interesting year. And I think a lot of people are very cautious about that super cycle word. Seyr made it nicely because he didn't say it's super cycle, but he said in Madeira, we are about to enter a 10-year Bitcoin gold rush. That's basically the super cycle idea, but he didn't use the word super cycle for that. And I think there are a lot of arguments to be made that we actually entered that. But in the past cycles, we're all predicting a super cycle, and then it didn't came. So I think we're kind of cautious around that because we always thought it, and it never was true. But it will be true at some point.
It's going to be true at some point. I think as all Bitcoiners, we agree on that, right? I actually I don't like the language super cycle though, because I think it can mean too many things to too many people. I've been using the language of a phase shift cycle because I think at some point we will go from storing value in dollars, which is the prominent way, or in treasuries, actually, to be more accurate. But basically, in the existing financial system, I believe there's going to be a phase shift to where humanity shifts across the event horizon and into Bitcoin as the primary store of value. And I think that that's a more meaningful language set to use, because there's, at that point, the exchange rate to the dollar isn't actually going to make as much sense anymore, because you will then be caring more about, hey, what's the purchasing power of my Bitcoin? And so we'll flip the lens around. How many eggs can I get for my Bitcoin? How many houses can I get for my Bitcoin? That'll be more the language set, I think, when we hit that phase shift. But I think all of us can feel that at some point, like in the not so distant future, like money is just starting to feel funny. It's starting to feel monopoly like, and there's something starting to seem and feel more tangible about Bitcoin. And I think Bitcoiners are probably the only folks that really have that sense at this point. But when the phase shift happens is when I believe most of humanity is gonna kind of come into that camp and be like, oh no, this is actually more solid, not this funny monopoly money I'm using.
Yeah, it's once you get into Bitcoin and you actually understand Bitcoin, and you probably need like a year or maybe 2 years to really get in there and get in this Bitcoin mindset. You feel really funny when you use that fiat monetary system. Yesterday, I received something I never received before. I received a physical check from my old landlord in Munich because there was some money left over. They got some bonus or something like that. So there was like $40 left over. And he has my IBAN. He could send me just like his money on bank, but I think he's 80 years old, so he's from an older generation. And he sent me this physical check where it's just like written like $40, and you can then use that check at the bank and get money for that. And then it was like, oh yeah, someone just written something on a piece of paper, and then I get another piece of paper out like that. That's just, it looks like we are playing a game here. There's no reality in this fiat game, just receiving paper and exchanging paper for paper. That does not make sense at all for me.
Yeah, it's such a different reality. My dad, last I was in at home, there was some financial exchange that we needed to do, and he cut me a check because that's what he's used to. And the guy turned 70 this year, right? So no problem, Dad. I'll figure it out, But it's the same idea. It's like, if you look at it, it's like there's basically these like archaic little symbols across the bottom that are like the routing numbers that if you compare that, a lot of people get scared about like a Bitcoin address, for instance, and it's like, well, you didn't really care about all that like robotic looking characters that were on the bottom of checks. Like, why are we going to get so scared about these strings of characters that we call a Bitcoin address?
Yeah, absolutely. I think we just need more time to build out the the fancy apps, the fancy hardware. Like there are already a lot of fancy things out there in Bitcoin. I'm surprised how easy it is compared to like 5 years or even 10 years ago. How easy it is now to mine Bitcoin, how easy it is now to buy Bitcoin on exchange or something like that. So it really got easy, but we have a long way to go to make it super easy, like so clear, where you can just exchange Bitcoin in your messaging app. I mean, it's possible in Austria, and we have those apps, but almost nobody uses them outside of the hardcore Bitcoiner crowd. So we still have a long way to go there. Also interesting because we talked about that before. I think that year 2024 is a really special one because so many milestones happen with like the president, with the Bitcoin ETF, with the halving also. What do you make out of 2024 as we are kind of close to the end?
So I think 2024 proved to me that the human species is horrible at dealing with exponentials. The reason I say that is because I adopted Bitcoin in 2015 and I was particularly slow. You said it took a normal person a year or two. It took me like a good 4-year cycle before I really started to get my head wrapped around Bitcoin. And I mean, in a meaningful way, and pulled me out of like the land of shitcoinery, right? To where it's like, oh no, like I get money now, and why Bitcoin has meaning and purpose beyond like this speculative fever that I've been in, and what I could not ever fathom. I read the early cypherpunk things. I read a book that was all of Satoshi's writings that had ever been published, and what I couldn't fathom at that point, even though like the early cypherpunks, Hal Finney were talking about like what the potential this could be, is like those things actually occurring, right? Never thought that like within like the next 8 or 10 years, we'd see the US president start talking about Bitcoin or Bitcoin as a strategic reserve. Like even the ETF process was like, it'd been kicked around for 10 years. I think the Winklevi twins had applied for an ETF like 2013 or something, had been rejected. It just seemed like it was going to be inevitably rejected forever. There'd be excuses the existing system would come up with. And so when you see these things like turn over, it was like, well, I guess maybe, like, oh my gosh, like here's this guy that like, Seyr, that is adopting it at an unbelievable rate. Like, I guess maybe we're going to see institutions come in, but it's not until you actually see it happen that you're like, oh, yeah, okay, like this is what exponential adoption looks like. So it definitely is faster than I could have ever guessed. If I were to put myself back in 2015 when I first acquired Bitcoin, I would have guessed maybe 2030 to 2040 sort of time frame that would be where we are today in 2024.
Absolutely, the same on my side. When I came into 2020, I didn't thought about El Salvador being a country in Bitcoin. The president talking about it, that's just it feels a little bit unreal, to be honest. Sometimes I feel like are things moving too fast? are we entering like that Parker Lewis talking about that suddenly phase all of a sudden? That could be really, really interesting. But coming back to the mining topic, you with SaaS mining offer like a Bitcoin mining as a service. What is that, and what benefit does that give people?
Well, I like to explain it with a little bit of a metaphor, which is, hey, when was the last time you stepped into the street and flagged down a taxi?
What?
When was the last? Exactly. Right? Like if you need to get a ride to the airport from wherever you live, you're going to open up the Uber, the Lyft app, and a taxi is going to show up at your doorstep, right? And in essence, that's been the approach that we took. Like that's a ride share as a service sort of approach, right? Where taxis were the norm. If you had a buddy that was a taxi driver, you could give him a call. If he was awake, maybe he'd come get you. Maybe you stood in the street in New York City and tried to hail a cab. But, it was a very inconvenient experience before. And to me, that's the difference between hosted Bitcoin mining and mining as a service. And what we aimed to create was a simple user interface and experience that put all the complexity of mining into the background and left users with a simple set of decisions. So what I mean is, we've got an e-commerce store. We've got just a couple of different mining rigs available for purchase. So it's a curated list of, hey, this is a specific hydro-cooled miner that gives you the ability to recover heat using it. We've got another mining rig that is the most efficient for air-cooled. And then we've got another one that's slightly below that, a better price point. So if you're value conscious or price conscious, like that'd be the one for you. So kind of instead of having like all makes and models and forcing users to decide, it's like, no, here, let's make it easy for you. Here's three options. They're distinct. You make a choice between these three. And then once it's purchased, we get it procured, we get it deployed into the data center. And then we've got a simple and easily understood dashboard, right? So you can actually have like, here's your user settings. Here's the settings of your mining rig. Here's your 2FA, here's your contact information, whatever you want to share with us for a name, phone number, that sort of thing. And then here's your Bitcoin address where the rewards are going to go, right? And then you can see the payouts. You can track them on the blockchain. You can see your service fees, meaning your electricity and maintenance, how much those cost. You've got your invoices available, like all the things that you would want in one single place and interface. Whereas right now, the ecosystem, if you're trying to host with somebody, you've got maybe the party that you're working with, and then you've got a mining pool that you need to go log into, and then you've got maybe a third-party monitoring solution, and you've got a VPN into your mining rig and get it coordinated and pointed to the pool of your choice, and all these things that create a lot of friction for people to adopt it. Just taking all of that and hiding it in the background through the use of innovative design and user experience and user interfaces.
It's really interesting because in the back of my mind is like there's like the FIRE community, retirement community, passive income community, and the Bitcoin community. And for all them could be Bitcoin mining, especially as a service, be really interesting. Like there's like, if you just want to learn about Bitcoin mining, probably like a BitX, like a solo miner is probably the best way to go
100%.
just to learn it. But if you actually want to invest in Bitcoin mining, Bitcoin mining as a service seems to be super interesting. Say, coming from a guy that has very little clue about Bitcoin mining itself. That's why I also want to start next year to get a little bit more into the space, just from a knowledge perspective. I will try different things. We'll compare it, maybe make some podcast episodes around that. But in general, Bitcoin mining seems to be a really interesting passive income, maybe Bitcoin as retirement thing where you invest some portion of your money, and I know it's not secured income because the free market and reality is at play at Bitcoin mining, but you have a good chance of getting maybe a retirement income from Bitcoin mining. Is that also something that you see with your clients, or is there something that you're even looking at for SaaS mining?
Well, I think I don't see it as a useful tool from a passive income standpoint because of the variability. Like if you're somebody that has a fixed budget on a monthly basis and you are dependent on the income for Bitcoin mining to service your needs and you're in your later years in life, like I think there's a lot of risk there from a Bitcoin mining perspective. However, if you're somebody that is looking to stack Bitcoin because in the next 48 years that the capital that you can afford, your disposable income, as long as you're continuing to cycle that into a Bitcoin position, that it's going to create the economic opportunity for you to retire early, then I think Bitcoin mining is a wonderful opportunity for that because it's a DCA product, right? You're cycling your fiat, just like you would go into an exchange to DCA, you're cycling your fiat through hardware and electricity to stack sats. And those stacks are outside the system completely, also, which is the secondary benefit. But I do see, to your point, that we have a lot of the service industry folks that are finding us. Like we've got cops, firefighters, nurses, who else do we have? We have real estate folks that are doing this. We've got a wide ranging group of folks, but the reasons tend to be split pretty evenly between stacking fiat and stacking Bitcoin. But we find that the clients that are focused on stacking Bitcoin tend to be a bit more realistic about the outcome. So we try to focus on growing that side of our community.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. Absolutely. And it's, I guess the real estate community likes that there's a cash flow in Bitcoin. Like there's no yield on Bitcoin, but with Bitcoin mining, there's like all of a sudden a cash flow, and they're used to cash flows. And even like with you have rental properties, the income can also be very, depending on if you find someone to live in there and pay consistent income. But the real estate community might also be really attracted to Bitcoin mining.
I think there's something really important that we haven't talked about that's worth mentioning, which is that I think because Bitcoin mining is so capitalistic, I think that people that have showed up first looked at it from this cash basis and not from a Bitcoin perspective. And if you look at the Bitcoin community at large, you see it's sort of broken into two major camps, right? One camp I like to call, and I picked this up from Steve Barber, by the way, so it's not my terminology, but I like it, which is the merchant Bitcoin economy. And then you've got the other camp, which is the mining economy. And if you look at those two camps, they really don't talk to each other. And primarily, the incentive that drives both of those at their core, like the Bitcoin only companies that are in each of those, in the mining space, they're driven by the block reward, right? And in the merchant space, it's driven by the exchange of fiat into Bitcoin. Like those are really, unless you've got outside investor capital coming in, those are really the only two primary ways to drive value in this ecosystem. And so they're different sets of incentives. And I think it's taken the merchant Bitcoin economy quite a while to start looking at the mining side from a Bitcoiner perspective. And right now, I think that there's SAS mining. I think Ocean is doing that as well. I think that Bob Burnett at Barefoot Mining is doing that as well. But I think that there's a relatively small group of companies right now that are serving as a bridge between those two ecosystems. And I think that as we get more Bitcoiners into the mining side, we're actually going to see some interesting insights and innovations come out. And frankly, a lot of the fiat-based incentives that need to be purged out of the mining sector from my standpoint, because I think that if you're driven to acquire Bitcoin for the sake of the dollar, that's a completely sort of wrong mindset that can ultimately harm the network. And I think we see that to a degree with how hash rate is consolidated, how it's wound up in a relatively few numbers of mining pools, and the potential damage that that can do. So I do think that there's a moral reason that the Bitcoin community should get more involved in Bitcoin mining. And hopefully, products like ours can create the financial incentive for folks to do so. But I think it's sort of imperative on us as Bitcoiners to protect the network and do it from an incentive set that is driven on the acquisition of Bitcoin instead of fiat.
Absolutely. Do you see it as a problem that the Bitcoin mining pools are very centralized? I mean, there are like a few big ones that basically have most of the control. Bitcoin mining itself is a quite decentralized. I think America has the most with like around 30% or something like that.
I think it represents a potential problem. Now, it's not an actual problem until it is a problem, right? Until there's bad behavior that occurs. But I kind of think it's similarly like Coinbase's custody program, I think is problematic for our industry as well, right? Because it creates a honeypot incentive that a government could come in, step in, and acquire all that Bitcoin. Now, whether that occurs or not, I've crossed my fingers. It doesn't. The rule of law stands in the U.S., and that's never a problem. The thing with hash rate, though, is I think it does represent a potential problem, right? So, I mean, if Antpool, which is the one that's consolidating most of the hash rate at the moment, I don't know the latest numbers, but I know it was like 40% plus of the hash rate was being directed to that mining pool. That represents a centralized force that an adverse state actor could come in, and there's a throat to choke there that could lead to some problematic behavior on the Bitcoin network as a result. So I do think it's incumbent on us to shift our hash rate and try to get it more distributed. So I like what Ocean's doing, actually working with them. If, let's say 40% of the hash rate is centralized into Antpool, there is now an incentive that a state actor could come along, and there's a throat to choke there, so to speak, that could lead to some adverse behavior on the Bitcoin network. So I do think it's incumbent on us, not that it will happen, but that we take away that incentive by distributing the hash rate with, mining pools that are more aligned with the network, such as Ocean, which we're in the process of integrating with so that we can offer it to our client base. Right now, we currently offer Luxor, but we're going to offer Ocean before too much longer. I don't have an exact time frame on that, but we want to give our clients a choice of mining pools. And it's been a very requested feature too from our clients. That's one of the heartening parts of serving the Bitcoin community that is looking to mine and acquire sats is they genuinely care about the network. They want us to offer them Ocean, and so that motivates us to figure out how to get that done for our clients.
Absolutely. Bitcoiners are the best driving force. Like if you have Bitcoiners in a Bitcoin company, they will tell you how it's best for not only them, but for the Bitcoin network overall. It's an interesting customer base to have, because they look outside of themselves also, which is rare, I think, in customer bases.
Well, yeah, customer bases, and I think our staff. I've hired intentionally. We're an early stage startup, so that comes with a lot of challenges with it, and I found that in the beginning, I was open to people that weren't completely orange pilled, let's say. And now that's one of the primary things that I look for and screen for right off the bat is I do some questioning to just ensure people are orange pilled, because if they don't have that sense of higher purpose of what it means, what Bitcoin's impact can be on society, then they can get lost in the hardships that come with an early stage startup, with a lot of moving pieces. But if they've got that higher purpose about them, then, those hardships are like, okay, cool. It's just another challenge to overcome. Let's get it done.
It's super interesting. One thing that I want to note still from Antpool, when we played that scenario of like actually a state actor comes in and tries to get after Antpool, from your experience, how how big of an impact would that actually be? Wouldn't the miners be possible to just like switch to another pool, or like it seems like even if they choke the ant pool, the miners are still somewhere else, and they can still just switch the mining pool.
Well, this is the particularly insidious issue with this at this particular point, is that it wasn't even known until I'd say the last 6 to 8 months how big of a problem this was, because there's been a lot of backroom deals that allow proxy pools to point and redirect their hash rate to ant pools. So in essence, you've got ant pools here, and then you've got these other layers that don't say they're ant pool, but wind up directing their hash rate to ant pool. So what's the problem if you don't want to mine with ant pool is, who do you point your hash rate to that's not ant pool? And that's where really Ocean is one of the few that's able to say, hey, look, our code is all transparent. Maybe it's not quite yet, but that's their intention. But at least you can see that, because there's no holding place for the rewards as they come about, like that there's no way for that centralization to occur in the same way. They're not being a proxy. It's just a completely different design. Now, if you don't have that level of transparency, you can't actually say. And I think that there are some pools out there that we don't think are ant pool that actually are proxies for ant pool. So are you really shifting your hash rate away from it or not? That's an open question that can't be very well resolved right now with the lack of transparency.
It's definitely a thing where the Bitcoin community still has to get better and we improve it. Really interesting insights. Let's get a little bit of a different pace in here. When we talk about Bitcoin mining, it brings a lot of interesting advantages to Earth, if I say so, with different perspectives, like the grid stabilization, with mining in areas where there couldn't be any plants, but now there can be, because all of a sudden it can be profitable with Bitcoin mining. How do you see Bitcoin mining playing a role in the transforming energy, or maybe in the future in the energy markets? What insights did you already gain with SAS mining from that?
Oh man, this is a big subject, Robin, and one I'm quite passionate about. And the reason why is because I grew up on a farm. I worked for over a decade in the rooftop solar industry. So, kind of a driving force for myself personally is the harmonization of humanity with the planet. And a bit sad to watch the ESG movement sort of co-opt what rooftop solar could be, for its own sort of narratives. But when it comes right down to it, there's a major problem on the grids, which is energy is not always produced at the time or the place where it's needed. And that dislocation always causes very low cost energy to occur. And the low cost energy is the energy that Bitcoin miners want. And so if the hydro dam is too far away from the city center, or it's night, and there's no electricity being generated from a solar farm, or the wind's not blowing, these are all things that Bitcoin mining can mesh with, is this variability. So what I see is that Bitcoin mining over time can sort of even out the grid completely, while monetizing that in the process. So let me give a more clear example. So if we back up, the grid itself is, and this is shocking for a lot of people to discover this, but you can't store electricity, not very cost effectively. You can in batteries, but to scale that is quite challenging. But let's just set aside batteries for a moment because it's relatively new development on the grid. But the way the grid works is you use it or you lose it. 100%, right? And so what is generated and put on the power grid from whether that's water falling, whether it's atoms being split, whether that's sun shining, the electricity is generated, is put on the grid. And the grid operator has to balance that with all the loads that are on the grid that are consuming that electricity. So when there's too much power that's put on the grid, they've got to figure out, how do I dispel it? Do I ask different power generators to turn off? And then vice versa. If there's too much load on the grid, they've got to figure out, okay, how do I reduce that? And that's where all the complexity comes from, is just balancing supply and demand, because there's not really an effective storage mechanism when it comes to electricity, not a cost-effective one. And that's where Bitcoin mining shines, is the ability to come in and consume the excess on either side. What I see, sort of a popular quote, I think Brandon Quittem is the originator of it, who happens to be an advisor of SAS Mining. But, Bitcoin mining sort of teaches you everything that you don't know about Bitcoin and everything you don't know about energy. And so ultimately, I see, just as Bitcoin has forced this conversation on answering the question, what is money? I think Bitcoin is also forcing the question and the conversation around, what is energy and how do our grids work?
Interesting. It's also probably, from your standpoint, hard to decide like where to even start to mine Bitcoin, because there's like, the world is basically the possibility you can mine everywhere, because it's just like you need an internet connection and some form of electricity. I've seen, I think, on the website that you do Norway and Power Cry right now. If you shop rigs, how do you go ahead and decide where to mine Bitcoin if you have so much space where you could mine Bitcoin?
Well, let me break that question down into just like a couple of steps and just back up, because I think it's important to understand that the incentive from a mining perspective is to find the lowest cost electricity. And the lowest cost electricity is electricity that's produced in either the wrong place or the wrong time, maybe both. Right. And so that's where the cheapest power comes from. And most of that power is renewable. That's why the incentives are set up such that we see the Bitcoin network at, I think, 57% carbon-free power at this point, and growing. So it's the cleanest industry in the world. It's also the cleanest, if you consider the Bitcoin network to be a network state. It's actually the cleanest state on the planet as well, just from a complete carbon emission standpoint. But as far as where you want to operate, for us, what we do is we contract rack space. And so we take a very long amount of time to find a data center operator that we can trust our clients with. And we spend a long time negotiating out the contracts and basically dealing with all the potential conflicts that can happen up front. And that takes months to have. And that's really like probably core to our value proposition. But we start with the trust basis of the data center operator. Then we've got, hey, what's the energy source? Because we only offer carbon-free power to our clients. And then then after that, it is, okay, how much space and what's it going to cost our clients? So there has to be a clear value proposition there. And if all those things align and the rule of law is fairly strong in a jurisdiction, then we can move forward with offering that to our clients. And so far that's led us to, we've got a data center in Wisconsin, data center in Paraguay, and one in Norway. And the one in Norway is our newest, and it's also quite innovative because the heat that's being generated from Bitcoin mining is being utilized to heat the building that the data center is in, because this data center is north of the Arctic Circle. And it's sort of a fascinating project, first of its kind, where the average person can participate in heat reuse. It's all powered by hydroelectric energy, and the heat is going to go to reutilize or heat the building, and the building owner is paying for that heat because it's cheaper for them to buy the heat from the data center than it is to run a boiler. And in fact, they're actually able to remove an oil powered boiler from the building as a result of the data center becoming operational.
I loved it so much because we had that discussion around Bitcoin mining being bad for the environment, and anybody that saw a little bit closer in the community and actually saw what Bitcoin mining is, saw that that's just BS. That's just like, you did not do any research. You're just like throwing out numbers out of context. And I feel like since BlackRock is in the game, that narrative of Bitcoin being bad for the environment kind of vanished. I don't know if that has anything to do with BlackRock entering, but it seems like this year was kind of the death of that narrative. And it really evolved now in, Bitcoin mining can stabilize the grid. Bitcoin mining can incentivize renewable energy. It can reuse energy like the heat, as you just mentioned in that example. And I think that's beautiful. I think that's really great. And I'm really looking forward when all those green movements, all those environment movements, if they are honestly driven by environment and not political driven by some communist agenda, if they're actually honestly driven by environment, they have to come to the conclusion Bitcoin mining is something great for the environment, is something great for our nations.
Yeah, I 100% agree with it. I mean, it's thank God the ESG narrative is dying, because now we can actually get back to just like, okay, let's actually just worry about the environment instead of like posturing that we care about it. And so, as maybe an anecdote to this point, I worked in rooftop solar for about a decade. I left that industry in 2014, so it's been about a decade since. But I still have close friends. Best man from my wedding is still in that industry, and I talk to him all the time, and he's like, oh my gosh, man, like I'm seeing it. I'm seeing where Bitcoin mining and solar make a lot of sense. So I see that industry coming around. And, Daniel Batten just published or made the community aware of a relatively new study that just came out that showed that the payback period on a solar system now can be reduced from 8.7 years to like 3.7 years if it's partnered with Bitcoin mining. So these theoretical things that we have talked about are now being proven out in like academic papers. This is a white paper that I'm just referring to that Daniel Batten published, and you can go read the abstract and see, no, it's true. Like the numbers are there. And no amount of crying, gnashing our teeth, and complaining about what we should be using electricity for because Bitcoin mining isn't valuable can change the fact that it is continuing to go up in price, and that it is a cost-effective way to bring more renewables on.
Absolutely, 100% agree. Before we come to the end question of the podcast, one thing we kind of talked a lot about 2024 already. What do you expect for next year? What are you excited about next year? What is kind of like your outlook? What you're excited about?
Oh man, next year I just feel so incredibly bullish about the potential, and there's so many different ways that next year can go, but no matter which way it goes, it just looks extremely bullish for Bitcoin, right? Like next year genuinely could, and I give this small percentage odds here still, but next year could be the phase shift year, right? Where we get crazy nation state adoption happening, and everyone and their mothers suddenly adopting Bitcoin in masses, and we see the God candles, and no more Bitcoin left on exchanges to acquire because the last 2.2 million that was freely available on exchanges aren't available, and now everybody has to mine Bitcoin. Like that could happen, right? I give that relatively low odds. I think we've still probably got another cycle, maybe two, before we hit that sort of phase shift, but it could. And I think most importantly, though, is that this cycle is the cycle that locks in Bitcoin's store of value use case. I think we get to the end of that adoption curve, and then we start moving into the medium of exchange adoption curve. Now, as far as how that plays out, what nation states sit up and sit down at the table and adopt, or what states in the U.S. even, because there's talk of different states, I just think it's all up for grabs right now, and there's a bit of a land rush that's occurring on the nation state level. And that's shocking to me, because I expected corporations to move ahead of nation state actors. But, I think all bets are off next year, but in a bullish and very exciting way. And so I think that we're in for the main event. This is my third cycle, and this is the first one that I sort of feel prepared for. And prepared meaning that I know I'm completely unprepared and ready to eat a bunch of popcorn and watch it all play out, but excited to see what that reality actually is.
Yeah, you can never be ready for what's Bitcoin bringing to you, but you can be ready to just sit back and enjoy it.
Well, here's what I really love too. So, Robin, I don't know if it was caught on recording, but we met a couple weeks ago in El Salvador, right? Like in the last year, I've just been reflecting on where Bitcoin's taken me. Paraguay, Norway, Netherlands, Portugal, the US several times. Like I'm going to be in Medellin in Colombia next month. I mean, if you're a part of Bitcoin and part of this movement and like putting your shoulder against the wall, like Bitcoin itself, it takes you places that you just can't even imagine that you'd be, and puts you in circles and conversations with people that you just can't even expect. Like, you were backstage and we briefly met. I didn't know that I was going to be a podcast talking to you and your audience just 2 weeks later, but it's kind of the magical serendipitous side of things. And I think that's what gets me the most excited, is just meeting just amazing people that genuinely care about this value set of separating money and state that just is really unusual. It's brought together some really, really cool, fascinating people that I just always learn a ton from.
100%. It's crazy how the Bitcoin community sucks you in and gives you opportunities if you're willing to do the proof of work in the community and provide some value. Now coming to a question that each and every one of my guests is getting: what can we learn from you outside of Bitcoin?
Oh, that's one of my favorite questions. So, I think that a life lesson that I can learn or share that I didn't understand when I was in my 20s was that the idea of sovereign being a material thing is just not true, and you need to work on yourself. You need to develop yourself. And I don't mean just physically, but I mean emotionally, psychologically, and do the proof of work in those arenas in life to really develop the most satisfactory rewards in life. It's not because even if you get to the end game and win the rat race and have a huge pile of Bitcoin and are sitting on that, you're still going to be with yourself. Once you have all that material wealth. And if you're dissatisfied with yourself, all the money in the world isn't going to change that. So, developing that relationship with yourself and getting yourself comfortable in your own skin, I think is an undervalued and an underappreciated aspect of maturing that I encourage all Bitcoiners to go through and spend time focusing on.
And with Bitcoin, that journey gets easier while you don't have to worry too much about finances. That's at least the hope I have for all the Bitcoiners out there. Really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the question from the previous guest for you is: who is the most important person for you to orange pill in your local area? Seeing like the mayor, a teacher, whoever it might be. Basically the person that would make the biggest impact for Bitcoin in your region.
So I'm going to say The name of the fellow that I'm thinking of is Jack Mabid. So it's a name Bitcoiners haven't heard of, but he's a French doctor that came to my area of Peru about 32 years ago, and he started an NGO that treats drug addiction using a combination of Amazonian plant medicine and Jungian talk therapy, and has a success rate with it of about twice what traditional clinics and treatment programs use. And it is a clinic that draws in people from, geez, all over the planet to show up here where we live or near where we live. And I think that orange pilling him would lead to a lot of other people around the planet being orange pilled. So kind of a pillar of the community type of a fellow that touches on quite a large international community.
Interesting. I love that. Really cool. Perfect. And yeah, thank you so much, Kent, for being on the show. Before I let you go, where can people find you, ask you questions, reach out to you?
Yeah, Twitter is probably the best, or X, I guess. I should give Elon his due at this point since he owns it. X is probably the best. At K Halliburton. Halliburton is spelled with two L's, but first letter, last name at K Halliburton. DMs are always open. If you want to reach out to me, please do. And then you can find out more about the company Saz Mining at sazmining.com, and that's all one word, SAZ Mining.
Thank you, Kent, for being on the show, for taking the time. Thank you so much for everyone that is watching and listening. As always, I'll be back tomorrow with another episode. Bye-bye.